Artificial intelligence, AI, has emerged as a transformative force in various sectors, and the financial services industry is no exception. Over the past few years, financial institutions have increasingly adopted AI technologies to enhance operational efficiency, improve customer service, and streamline decision-making processes. This video explores the significant impact of AI in financial services, addressing its applications, benefits, challenges, and future potential. One of the primary applications of AI in financial services is in the realm of risk assessment and management. Financial institutions have traditionally relied on historical data and traditional analytics to evaluate potential risks in lending and investment decisions. However, AI dramatically enhances this process by utilizing machine learning algorithms that analyze vast datasets to identify risk patterns. For example, AI systems can analyze social media activity, transaction histories, and even environmental factors to provide a more comprehensive risk assessment. As a result, lenders can make more informed decisions, ultimately reducing default rates and enhancing overall financial stability. Another significant area where AI is making strides is in customer service. Financial institutions have employed AI chatbots and virtual assistants to handle customer inquiries more efficiently. These AI-driven interfaces can provide instant responses to common questions, process transactions, and even offer personalized financial advice based on a customer's profile and behavior. This not only improves customer satisfaction through quicker resolution times, but also allows human agents to focus on more complex issues, effectively optimizing resource allocation within the organization. Algorithmic trading is another domain where AI is influencing financial markets. By processing vast amounts of market data at high speeds, AI-driven trading algorithms can identify trading opportunities and execute orders in real time. These systems analyze historical prices, trading volumes, and market sentiment to make decisions that maximize returns while minimizing risk. This level of speed and accuracy is beyond human capability, leading to a significant increase in trading efficiency and effectiveness, ultimately reshaping how financial markets operate. Moreover, AI aids in regulatory compliance and fraud detection. Financial institutions face extensive regulations designed to combat money laundering, fraud, and other illicit activities. AI systems can analyze transactions in real time, flagging any suspicious activities for further investigation. Traditional methods of detecting fraud often relied on preset rules, which could lead to false positives or missed opportunities. AI's ability to learn from data patterns allows for more sophisticated fraud detection mechanisms, enhancing financial security and ensuring adherence to regulatory standards. Despite the numerous benefits, the integration of AI in financial services also presents challenges. One of the prominent concerns is data privacy and security. As financial institutions increasingly rely on AI systems to process sensitive customer information, they must ensure robust cybersecurity measures are in place. Breaches in data security can lead to significant financial losses, damage to reputation, and loss of customer trust. Additionally, the use of AI raises ethical concerns regarding decision-making transparency and bias. Algorithms trained on historical data may inadvertently perpetuate existing biases, leading to unfair lending practices or discriminatory outcomes. Another challenge is the regulatory landscape surrounding AI technologies. Financial institutions must navigate a complex array of regulations that govern their operations, and the rapid evolution of AI poses difficulties in keeping compliance measures up to date. Regulatory bodies are grappling with how to appropriately oversee AI applications in finance. The integration of AI into financial services is multifaceted, encompassing areas such as risk assessment, fraud detection, customer service, and investment management. One of the most notable applications of AI lies in risk assessment. Financial institutions are required to evaluate the creditworthiness of borrowers meticulously. Traditional methods often rely on historical data and simplistic credit scoring systems. However, AI algorithms can analyze a much broader range of data, including social media activity, transactional behavior, and even alternative data sources. This capability can lead to more accurate assessments of an individual's credit risk, allowing institutions to extend credit to previously underserved populations. Fraud detection represents another critical area where AI has made substantial inroads. The financial sector has long been plagued by fraud, costing institutions billions of dollars annually. AI-driven systems utilize machine learning to recognize patterns and anomalies in transaction data that may indicate fraudulent activity. For example, when a customer's spending behavior suddenly shifts, AI systems can flag such transactions for further investigation. As a result, banks can respond more swiftly to potential fraud, thereby protecting their customers and their resources. Recent innovations have further enhanced these systems, allowing them to learn from new data and continuously evolve in their detection capabilities. Customer service has also been transformed by AI technologies. The rise of chatbots and virtual assistants has provided financial institutions with new ways to engage with customers. These AI-powered tools can handle inquiries, provide information, and even carry out transactions, often without human intervention. For instance, banks such as Bank of America have introduced virtual assistants like Erica, which guide customers through banking tasks. This not only enhances customer satisfaction by providing quicker responses, but also allows human employees to focus on more complex inquiries that require personal interaction. As natural language processing technology continues to advance, these AI systems are becoming increasingly adept at understanding and responding to customer inquiries in a conversational manner. Investment management is another domain benefiting from AI integration. Through algorithmic trading and robo-advisors, AI has changed how investments are managed and executed. Algorithmic trading uses AI to analyze vast amounts of market data and execute trades at optimal prices, often within milliseconds. This approach increases efficiency and minimizes human error, allowing traders to capitalize on fleeting market opportunities. Robo-advisors, on the other hand, utilize AI to provide personalized investment recommendations based on an individual's goals and risk tolerance. By automating portfolio management, these platforms make investing accessible to a broader audience, promoting financial inclusion. Despite its numerous advantages, the implementation of AI in financial services is not without challenges. Regulatory compliance remains a significant concern as many financial institutions grapple with the complexities of adhering to existing laws in a landscape continually reshaped by technology. Data privacy represents another critical issue. The use of AI requires significant amounts of data, raising questions about how this information is collected, stored, and used. Financial institutions must navigate these complexities while ensuring that they maintain customer trust and comply with regulations such as the General Data Protection Regulation (GDPR) in Europe and other similar laws worldwide. In conclusion, AI technology is revolutionizing the financial services sector, driving efficiency, fostering innovation, and enhancing customer experiences. From risk management to fraud detection and algorithmic trading, the applications of AI are manifold and impactful. However, these advancements must be balanced with considerations of data privacy, ethics, and regulatory compliance. As the financial industry continues to embrace AI, it is crucial to navigate these challenges thoughtfully, ensuring that the benefits of technology are realized broadly and equitably. The future of finance may very well hinge on the responsible integration of AI, shaping a landscape that is more efficient, accessible, and secure for all stakeholders involved. Looking ahead, the future implications of AI in financial services are vast and multifaceted. As technological advancements continue to develop, AI will likely play an even more integral role in enhancing personalization for customers. By analyzing customer behavior in real time, financial institutions can tailor products and services to meet individual preferences more effectively. Additionally, the ongoing evolution of AI and predictive analytics will enable institutions to anticipate market trends and adjust their strategies proactively. AI has begun revolutionizing the financial services industry, demonstrating its capacity to enhance risk management, fraud detection, customer service, and investment strategies. While challenges such as regulatory compliance, data privacy, and workforce implications remain relevant, the potential for AI to reshape financial services is immense. As financial institutions continue to embrace AI technologies, fostering innovation and adapting to changing dynamics will be crucial in navigating the future landscape of financial services. With a focus on collaboration, commitment to ethical practices, and continuous learning, the industry can harness AI's power while ensuring a balance between technological advancement and human oversight. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you never miss a money tip. Drop a comment below with your thoughts or questions. I'd love to hear from you. Until next time, stay smart, stay savvy, and keep building your financial future.